Hello, traders. Mark Hearth here from Flipside Trading. It's Sunday morning around 11 o'clock. And the first thing is I just want to send out, you know, positive thoughts to you and your family that hopefully everyone is healthy and safe in these turbulent times and getting to know each other better in a happy fashion, given the social distancing and kind of, isolation, quarantine measures that have been put into place, especially here in the state of Colorado. So the key thing is, as we look forward and figure out where we go from here, is let's build off of what we talked about in our post from last week. We had some key support and resistance levels that served as triggers. Some things happened and from a rally perspective, very much along our lines of the triggers. We want to review that and also take a look at the new set of triggers and figure out where we may end up going from here and how we can take advantage of this market in both the short and the long terms. So without further ado, let's dive in here and let's get to the charts. And so let's go back here to the daily first. And what we're looking at here is the S&P 500 futures. And if you remember from last week, what we said is that we think long term that we're going longer, right? That we're very, very overextended. Everything got repriced in this huge drop, right? Especially from here underneath the 200-day moving average within 30 days. And we had the unprecedented rate of, 28% drop from all-time highs and kind of year to date that has never happened before in the history of the stock market. Like everything else, the stock market, no matter the direction, doesn't move in a straight line. It's going to move up and down. And, people are talking about rallies and they're talking about bounces. And I think bounces are definitely here, but the key thing that we wanted to warn away from is a V bottom, in the sense that we're not going to go back and be like 2000 and 2018, where we jumped in here and just went straight up, right? That's a very small probability. Like we talked about, the Fed had much more control over monetary policy, and we did not have these, should we say, other conflicts and complexities associated with the coronavirus. So sure enough, okay, we said if we broke this resistance level around here at 25.32, that our initial thought is that we would come up at least to the 78.6 retracement level. We did that, probably pushed past a little bit more, but you can see that we've settled underneath it, and kind of over the time, this other resistance zone has kind of solidified a little bit more, and it consists of a number of different things. Number one, it consists of this trend line here, right, drawn from the highs. Number two, the 21-day moving average has kind of come down and floated, and price is coming back up to it. And number three, we have another, should we say, just technical price resistance horizontal line right here. So that's really saying, okay, that the market has, recalibrated a little bit. We're definitely out of balance from a sell perspective. We've come back in, we've bought, and now the question is, where do we go from here? Well, the first thing you can see is on Friday is that we had a pretty good, should we say, retracement off this resistance level. And one of the reasons is that folks didn't want to hold over the weekend. So let's take a look and we'll show you what the market did to folks. So basically here we're looking at a 5-minute chart. And you can see that basically, all day from, around, 10 or 11 o'clock, we were moving up. We broke all the way, came all the way through value, basically had this reversal doji right here, this shooting star. That shooting star put us back into value, and we came all the way down, right around at this 130 time frame, because everyone was just scared of what would happen over the weekend, right? There's a bunch of uncertainty. Is this virus contained or is it not? And we'll take a look out here and we'll show you what has happened and tell you what that's going to look like. So if we come back out here, if you remember or happen to note that on Friday, the U.S., we had about 85,000 cases. And now the U.S. itself is up to 125,000. So it's showing that the virus is still increasing. As a matter of fact, the virus is increasing on a very much still exponential level. And that exponential level, let's see if we get a better feel for that. If you look right here for the U.S., you can see here we are in the pink line, just moving straight up, and you can see the extensions that people are looking at. So this is going to put more pressure on basically, people working. It's going to increase unemployment claims. It's going to call for, if we say, more, I'll say, stringent conditions in other states as far as, stay at home and what's going to be a essential and a non-essential type business. So on Monday, or when the futures open up later today, I expect them to gap down. And let's go back to the charts here. And just like most Mondays, since those pieces, so the Mondays, let's pull it back just a little bit. And so the Mondays were, the 9th, the 16th, and the 23rd, right? And all those cases after the weekend, we definitely dropped. And you can see that after we dropped, the next days on Tuesdays, okay, we came back up. So here's the 24th on a Tuesday. Right here's the 17th, St. Patty's Day. Here's the 10th. So I guess from a short-term perspective, I would definitely look the markets to open lower with the futures starting at 4 o'clock Mountain Time. I then expect to see the markets to dip down and probably stay down, probably in the minus 60 to minus 120 level. And then on Tuesday, I think we'll probably have a turnaround Tuesday. And I would look to see if the market is going to move up and whether or not it will move, and if it does move up, how can we play it? So let's take a look real quick. I may change charts on you. I'm going to go here to my market internals, and let's see. I need to go to my flexible grid. Sorry about that. And I'm going to go here, pull it up, and market internals on our 1A. So when we get our internals, one of the things you want to look at is that when you see your advanced decline level really start to just pin out and be very, very flat, this tells you that during the day you can buy the dips. So when you're looking at a lower term time frame chart, say a 5-minute chart, and it pulls back to either the 21 or the 50 EMA on that chart, feel comfortable in buying the dip until it doesn't work, okay? So that's one way from a day trade perspective if you want to profit from it. The other key thing is you could probably wait after the first half hour. I'd wait for the first hour bar. And after that first hour bar was set, if you broke the new high of the hour bar on Tuesday, I would then go ahead and go for a long and then use the top of the previous hours as overall support. So I think those are two ways you can kind of, should we say, quickly profit from what's going on. But let's get back to, so that's the short term. So let's get back to the long term just a little bit more. So if you take a look at some of the things that we talked about, as far as if we saw a sustained rally, right, kind of more than a 2-day rally. If you remember, we had this chart here, and I tweeted it out as well as kind of sent it in last week's blog post, is that we're really looking for the advanced decline line to break this level in association with breaking the level here. And if we look at that chart now, right, this is the chart from the 24th, so it's last week, we really have not broken those levels, especially on the advanced decline line, right? We're very much in this channel, and we're waiting to see, what happens. We have, and so it's very important now that you can see the market is trying to make a decision if it's going to go ahead and jump a little higher. And the other key thing we can take a look at is, back to the daily charts from the price perspective. Well, what happens if it does jump? Where is it going to go? Well, we can show you that pretty easy. And we're going up. I'm sorry, I made that the daily chart. I didn't want to do that. I'll go back to these charts. So basically what's going to happen is I think we're going to go back to, if we break this resistance in this trend line. Okay, last time we broke it, we had a 200-point gain. If we jump here one more time, I think that we're going to get right up here to the 618. You can see that we have really good technical resistance right here, and also the confluence on the 618. So I would expect it to jump from 2600 to about 2730 if we break this trend line. So that's for next week. So that's something you can, kind of think about and plan out the rest of the week. If not, if we decide to come down, I think we'll come back down and definitely retest this support line at the 2350 level. So that kind of gives you a pretty good view. You can also see this in a number of different places as well. Besides the advanced decline line, a good place to look is some of your key commodities that forecast your world demand. And you can see here, this is copper, and we're looking at the copper futures, is that for the past 3 days we've had an inside day. An inside day means is that the high and the low is within the previous range of the high and the low. And so now we're getting this kind of consolidation, convergence, coiling. And whichever way this breaks, okay, this is going to give a good indication of whether or not we're going to go up to that 618 retracement level, or we're going to come back down to that previous 2500 level. This will serve as kind of a secondary confirmation in order to determine how you want to play out the rest of the week. Now, from a longer term perspective, how do we know when we're really kind of out of the woods? And we can take a look at that real quickly. And we'll look here first. So one of the key things that we've seen is that, again, we're using the advanced decline line, and we're using it for basically the New York Stock Exchange. And we're using the New York Stock Exchange because it's a much broader measure than the S&P 500, right? S&P 500 is about 500 stocks, and this is New York Stock Exchange is about, I think it's somewhere between 36 and 3,800, at this point in time. And basically what we're seeing is that if the advanced decline line breaks the Keltner channel, which is kind of this blue envelope, and you can see it in a number of different places here, that if we break it here, and if we break it here, or we came underneath it here, you can look down and see from an inspection standpoint, let's see, let's get rid of the drawing tool, right? So if we broke it here, you can see the market went down. Where we broke it above here, the market went up. We broke the envelope here on the Keltner channel, market's going up. We break the market here on the Keltner channel, market's going up. So this really serves as a pretty good indicator of kind of longer term trends of when it may be safe to really go ahead and drop money in. And you can see that we've hit this 21 EMA here within the channel, just like we saw on the ES, and we kind of bounced off it. So until we really see we break above this channel level, and it may not happen right here and right now, but at some point in time, we should see at least a trigger to go ahead and start thinking long in the market on your 401k long-term investment perspective versus your overall trading perspective. And you can see that this is really, to a certain extent, I'll say it's another view of it as well, right? Here's the XPX. We have the 50 exponential moving average. And once you drop below that, you can see then this is basically 200. We bumped up against it and we came down. But this level on the New York, advanced decline, if you put the 50 EMA up here and say when you cross, it really is definitive as a good long-term signal of what the market is going to do. So again, we need to get above this. So if we can see we get above the 50 EMA here, as well as break through the Keltner channel, then I think that that's a really good trigger point to say, okay, we probably won't retest the bottom, and we'll probably go ahead and it's time to go forward. But I think that's still, a month or 2 months away, but it's good to know to have it on your radar. Anyway, folks, that's what we have for you. Appreciate your time. Again, stay safe, stay well, and we'll catch you on the flip side.